Morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for August 7th, 2024. Well, yesterday we had a nice little relief rally in the market, but it struggled to hold on. And this morning we're experiencing a big gap up. There may be some concerns with that we'll talk about here in just a little bit. First off, let's take a look at what happened overnight. First off, we had Asian markets last night nicely up, nice and strong to the upside. The Nikkei continuing to jump back up 414 points. We're up 1.19%, and we were strong across the board with Hong Kong coming in as the leader, up 1.38%. Shanghai squeaked out a win on the day, up $2.55. Let's take a look at the European markets. European markets are decidedly bullish here this morning. Yesterday, they started bullish, and then they kind of faded into mostly negative before their close, but the DAX is up substantially this morning, looking at a 1.29% increase. FTSE's up nearly 1%, and the CAC is up more than 1.5%. So quite the move here this morning, seeing that bullishness coming into the market. Your U.S. markets are also extremely bullish this morning, with the Dow working on a gap of over 300 points to the upside this morning, and the NASDAQ showing a massive gap of 1.32%, or 240 points this morning. We're going to discuss that here in just a bit. First off, let's take a look at what else is going on. If we look at oil here this morning, oil running into a nice bullish move here this morning, with oil up $1.12 a barrel, as all of a sudden we seem to be suddenly unconcerned about the constriction of the consumer that really brought some of this into light. But right now oil is up surprisingly strong, up $1.14 a barrel at $74.34. Brent is up $1.20 a barrel, up $77.68 a barrel, and natural gas is also moving to the upside this morning, although it would be pretty tough to call that a bullish chart. When we take a look at cryptos here this morning, cryptos are also trying to recover and continue to rebound. Bitcoin being up $770 a coin this morning, but there is some mix in there. Litecoin is down, or maybe a little bit of uncertainty there in the crypto markets. And gold, after another day down yesterday, we're seeing gold trying to push back up this morning, right now up $5.60 an ounce. Silver, copper are slightly lower. Platinum and palladium are higher. If we take a look at our US dollar, we're going to want to keep an eye on this. I don't know if this is a bad tick or some really wild volatility in there. I think it was a bad tick in the market. They'll correct. But as you can see, the dollar trying to strengthen just a little bit here today. And remember, as the dollar strengthens, you typically see commodity prices move lower, which is interesting. We're not seeing that here this morning as we're trying to push back up, but keep a close eye on that. Let's take a look, at what's going on in our bonds. Bonds started to creep back up yesterday, and they're continuing that creep to the upside. The 2-year bond is now back over 4% at 4.02. The 10-year moved up to 3.93, and the 30-year is up to 4.21%. So moving back to the upside on those bonds, as we continue to have that lingering concern. What's the Fed going to do? When are they going to do it? Kind of thing. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at some of these charts and see if we can glean just a little bit of information about how we might want to approach the market for today. And remember, we want to shake off a bias. We want to look at these charts for what they are, not for what we would like them to be. And that's the little bit of concern that I have here this morning with this big gap up. So let's talk about that. First off, if we continue to see those bulls push on through. Remember, yesterday I suggested coming up into here and closing that gap, and we did close that gap and then pulled it back, and now we're gapping right back up into that area. If we can push on through that area, then we're going to be pushing up into this major area of congestion here in the chart on resistance. So pushing up into there is going to take, well, if this is a 300-point move this morning in the pre-market, that's going to take a Herculean effort to move us up through that area. If they can, then we push up into that area of the chart. But one of the concerns that I have in here is, what if this gap up is immediately met by some selling? And why could that be the case? Well, first off, we're running into some major resistance right here in the chart, and we're also going to be running into that 50-day moving average here really quickly. So if we slam into that and find resistance, we can actually find this gap up open as an opportunity to pick up a little bit of short to the downside. So watch that carefully as we push up here. And I don't know that that's going to be the case. I just am a little bit maybe overly suspicious about such a big gap here this morning, pushing us into resistance levels of the chart and expecting that we're just going to zoom back to the top, particularly when we hear from JP Morgan here yesterday. JP Morgan says that the carry trade that really started to create this problem is only about half complete. And if you look in here, we're not done by any stretch, according to the FX folks here. The carry trade unwind is only about 50 to 60% complete, and they are suggesting that there is more pressure coming here in the market. And as retail traders chase to the upside, the whole buy the dip thing, it may be giving them an opportunity to unload. So watch that carefully here in case we start to roll over at that resistance. Now, if we were to roll over at the resistance and the bears were to find that inspiration while pushing back down into a little bit of price support right in here, as you can see, we could catch that area and catch this trend and try and hold right in that zone of the chart. Pushing back down below there, well, we've got some real pressure that could come into the market if that were the case, and we would start testing some of these areas of these last couple of days of candles and maybe coming back down here into those lows. If we were to break those lows, that's where some real fear would come into the market. Now, I'm not suggesting that's going to be the case, but watch this carefully in this gap up open and be careful not to overtrade or chase this move to the upside as we come into this big area of price resistance. If we take a look at our SPY, SPY gave back most of that rally yesterday after we filled the gap, and here again we're gapping right up into that zone here in the chart. If I toss another line in there, gapping right back up into that zone. So we'll want to watch that area pretty carefully here. That's a big reversal overnight, and as we push into that resistance, watch for that possibility of that resistance coming into play. Now, if the bulls can push right on through, well, we need to break that big resistance right in here in the chart, and if we can do that, then we start moving up to test that candle, and then we have that opportunity to try working on this gap above, and of course coming into that downtrend. Now you will want to keep in mind that possibility on this big gap up, we could find that selling if the carry trade unravel continues to happen, and we want to make sure and remember that we are still well under the 50-day moving average. So as we rally back up toward this 50-day, we're going to have to watch that pretty closely for that potential rollover. So I'm not suggesting today is the day that we could roll over, but we'll want to watch that carefully in case that does happen to be the case. And if those bears were to find inspiration here today, push back down to retest this support level in the chart, looks very possible. Breaking down below there, well, you can see where we're going. We just start moving down progressively through these areas and we retest these lows if we do see those bears find reason to engage today. Remember, if we take a look at our QQQ has been very stressed, and unfortunately when we get some of those tech earnings last night, SMCI, well, unfortunately SMCI didn't produce very well last night, so we still have that overall pressure here in the market as we're unraveling this big tech trade. Now pushing up in this big gap up, it lost most of that move yesterday, gapping up into price resistance in the chart. I'm always suspicious of that overnight gap being so big that it's engineered by the institutions, and then we get that possible reversal that could occur in the market. And I am saying possible because if the bulls can continue to push, we're going to look for a break of that resistance, and then we'll start looking up in here and seeing whether or not we can come on up, filling that gap to the upside and retesting that downtrend. So if not today, we may be coming into that problem here very soon in the chart. If the bears were to find inspiration, you can see it wouldn't be, looking at this chart, all that big of a surprise if we did kind of roll over in this area. And rolling back down, I would suggest we're going to catch a little support right in here on the pullback underneath all of that, catch that little bit of support right there, and then we'll start breaking this back down toward the low of Monday if those bears were to have enough energy to do so. And remember, here we're also very far under our 50-day moving average, and this area of price resistance right here looks substantial to me, so we'll want to be keeping a close eye as we rally back into that resistance area. And if we take a look at our IWM also getting a nice bounce back, pushing back up into a big strong area of price resistance in the chart. We've seen this many times before where we have pushed up there and failed it, so we'll want to watch that carefully as we press into this level. If those bulls can push on through that level, then we start breaking up into here, and we maybe look at filling this gap up into that area of the chart. Now, keeping in mind, we are also right there at our 50-day moving average, and a very likely place where we would be wanting to watch for that potential failure to occur in that chart. If that were to occur and those bears find that inspiration, maybe just pushing back down into here would be a nice little rest in that relief rally. And if that doesn't hold and we lose that trend again here in the chart, then we'll start progressing back down through these levels here, and possibly even coming back toward those lows of Monday. Let's take a look at our VIX. Our VIX showing us some fear still exists in the market. So even though we had a nice little pullback, we want to keep in mind that our VIX is still holding on to a 27 handle, a lot of fear in the market. Now this big gap up should bring this VIX all the way down. We'll want to watch that carefully today if we see that fear dropping out of the market. But if we were to happen to see that fear not move so substantially and actually then start seeing selling coming in, we could actually make another higher low here in the chart and continued this move to the upside on fear. So watch that carefully if we happen to catch those bears. And I'm certainly not trying to suggest that's what's going to happen here. What I'm trying to warn is be careful chasing this move, and just in case they happen to reverse that big gap up at the open. Let's take a look at our T21 22, which is the 4-week new high, new low ratio. And you can see yesterday on the 2 days, a big upside reversal here. We've moved up pretty nicely here, but we didn't really perform all that great yesterday. Kind of struggled in here just a bit. If we can continue this move to the upside, maybe up toward that 50% and beyond, we're likely going to see a big gap up here. And first thing this morning, be up in this range or maybe even beyond that range in that 300-point move. But keeping in mind, if we can continue to hold that bullish enthusiasm, we still have plenty of upside opportunity. So again, I'm not trying to say that the bears are going to control this. I'm saying watch this carefully just in case. And if those bears were to find inspiration, well, I want you to recognize that we have opened a pretty big opportunity for those bears to push back in case they find some reason to do so. Now, our T2108, got to tell you, T2108 was pretty unimpressive in this move back up yesterday. And as you can see, we've got about 36% of the stocks above the 40-day moving average. That's a tough area to say, man, that's really bullish in the market. We'll want to watch this area with this big gap up. We're probably going to run into some price resistance levels in the chart, maybe even break over that downtrend right there, slam into some of these resistance areas, and maybe we can get back above this 50% area of the chart as we continue this really wild whipsawing in the market. But watch that carefully if this happens to fail to perform. If we take a look at T2107, T2107, not impressive yesterday. Pushed up, and notice we ended up finishing below the 50% area. This is the percentage of stocks above their 200, and we finished below the 50% area of the chart with significant levels of resistance above. So this gap up at this morning could slam us into some of those resistance levels, and that's why I want to issue that caution that maybe we gap and then start seeing some selling coming in, particularly if that carry trade unwind continues. If we take a look at our T2101, T2101 continued to see that breadth increasing here. Unfortunately, it wasn't all that bullish of a day. So that breadth increasing here is not giving us a big warm and fuzzy to the upside just yet. Perhaps if we get a good solid increase on that wave today and it can hold bullish into the end of the day, maybe we'll see a lot more comfort in that. And remembering that a good portion, 55-60% of the companies are now coming out from under their blackout period. So perhaps corporate buybacks can really start to engage here and help us out quite a bit in this relief rally back to the upside. Let's take a look at our earnings calendar, our economic calendar here for today. And our economic calendar, well, we've got a little bit on the calendar to be thinking about, but my goodness, this entire week is very, very light on that calendar. So taking a look at that, we've got mortgage applications this morning. We're going to get a petroleum status number. We've got some bond auctions and then a consumer credit note in here toward the end of the day, and you could see they're looking at that coming down, consensus from 11.3 to 10.0, so a little bit of decline there on that consumer credit coming in this afternoon. Looking into Thursday, we don't have a whole lot more except those kind of problematic jobless claims in there on Thursday. We've got a wholesale inventories report, natural gas. We've got a little bit of Fed speak, bond auctions, and a Fed and the balance sheet at the end of the day. So keep an eye on those. Let's take a look at our earnings calendar. And our earnings calendar is very, very busy today. A lot going on in that. We're going to hear this morning. We've got Disney reporting this morning. So keep an eye on that. Right now, it's suggesting just a little bit lower in the pre-market, but I'm not sure it's reported just yet. If we take a look, we've got stocks like CVS reporting here this morning. We're going to hear from Nomad here today. We've got PAYO reporting ROK. We've got Shop that will be reporting all this morning here. Stocks like Lyft reporting. So keep an eye on all of these reports. We're going to be busy this morning with that. And then this afternoon, we have a huge number of reports. Things like BYND, Beyond. We've got Blink in there, Boot in there, Bumble will be reporting. Robinhood will report this afternoon. So we've got a very busy day of afternoon reports as well. So kind of keep those in mind as we progress through the day. And that's going to be our biggest catalyst here for the day, whether or not those earnings can continue to provide the inspiration. And I think we're starting to be a little bit more critical of those earnings as they come out right now. There was so much hype prior to this big scare that didn't really matter. We were just, whatever the earnings was, it was a reason to buy. Now maybe just a little bit more critical of those earnings reports. So be careful. Anything that misses, kind of like Airbnb, got to get the right symbol. Airbnb, a big whoopsie happening on that yesterday as they continue to say consumers are really slowing down. So watch that carefully. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave that brief comment. That helps the channel to continue to grow. Thank you so much to everyone who does take the time to do that. I truly, truly appreciate it. And also for sharing these videos out on your social media feed. You guys are truly, truly awesome. Thank you very much. Let's take a look at a few of these charts that could be setting up. And remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence, be very, very careful in this market, and be just a little bit leery of this wild volatility. Remember, with the VIX being so high, implied volatility of options has increased, which means every option you buy is more expensive. There's more theta decay in those options. So make sure you're thinking very, very carefully. You're being very deliberate about the trades you take, and never ever blindly follow anyone else's trade ideas. Follow your rules and your risk tolerances. So first off, I'm going to go back to that theme that I kind of talked about yesterday, and that was the defensive sector area of the market. We're continuing, I think, to see that rotation into more defensive names, dividend payers. Old boring companies seem to be doing quite well. So taking a look at Tyson in here, reported its earnings, still holding in a nice little area of price support. May have to rest out here toward that upside trend. It is possible that that upside trend has increased its trajectory here, but watch that carefully in that range for that next opportunity in Tyson. When we take a look at some of these old boring things like SJM, Schmuckers, pulled back the last couple of days, Watch that carefully along that trend. We're seeing again some of those defensive sectors showing that nice little upside move starting to happen. We've got Hershey also showing that bullishness here in the market. The drinks sector, Coke continues to look very good and could be setting up for that next long to the upside. I would keep an eye on Pepsi as well. You might want to be looking into things like Altria holding in this nice bullish pattern coming out here toward trend. Look for that next opportunity perhaps in there. You could see things in Monster Beverage, Monster coming up here, holding onto some support. This is one of our favorite patterns in what we call a rounded bottom breakout, because we're rounding all of our short-term moving averages up. You can see the moving average squeeze that's being created right in here, and that possibility that we're going to pop on through and stretch on up to the upside. So watch Monster looking very good here today. Take a look at some of the other things that have just been running to the upside, like Colgate. Colgate continues to move to the upside, looking very, very bullish. And then if we look at some of the things in telecommunications, AT&T continuing to hold in there. Again, old, boring, high dividend payer companies doing pretty well. So keep an eye on AT&T, TMUS, another telecommunication, showing lots of strength here to the upside. I would keep an eye on those for those bullish opportunities. And on the utility side of things, utilities continuing to hold in a nice bullish pattern here in that chart. I would watch that carefully for that next opportunity for that to move on up. I saw stocks like NEE yesterday within that utility sector putting in a nice little bullish pattern, that opportunity that could push on through to the upside. So keep an eye on those defensive areas of the market. Speaking of defensive areas of the market, this is aerospace and defense. But we understand why these are moving up with all the conflicts around the world, the geopolitical issues. Take a look at LMT. It's been resting and pulling back in here. Might be wanting to watch for that next opportunity for that to extend. If we take a look at RTX, RTX, another aerospace and defense, resting back to support, might be sliding out here toward its trend. I would be watching for the next opportunity here as we continue here, that big worry of more attacks potentially in retaliation to Israel. So watch that carefully here. Aerospace and defense doing quite well at the moment. How about on the short side of the market? Well, there are certainly opportunities that could be setting up on the short side with this rally back up. Take a look at stocks like Chewy that pushing back to the upside, but pushing right back into this downtrend and price resistance. I'd be watching this for that opportunity of potential rollover. When we take a look at some of the big tech out there, take a look at AMD. AMD rallying back up could run into some resistance here in the chart as we push back. And you can see yesterday we pushed up into this bottom side of that little channel and already found a little bit of selling. So watch that carefully here if that were to roll on over. How about Google? I know no one wants to think that a giant company like Google can continue to sell off, but remember they have lost an antitrust lawsuit. They continue to move in this downtrend. So as we rally back up here in the chart, look for that next opportunity for that potential short. And there are quite a few of those in the market showing us those opportunities. So be kind of careful here in the market and try not to just assume that they're all going to never go down, and just be extremely bullish, blindly bullish on those tech sector stocks when they're showing those downtrends and those ugly patterns. Weyerhaeuser, another old boring company here, showing a very nice bullish pattern if you're looking for something there, looking very good. And eBay continuing to hold in there, looking very strong. So there are good stocks out there on both the bullish side and the bearish side. Be watchful, be very careful about your trading, and don't overtrade. Don't get caught up in the fear of missing out, chasing, racing in, because you can end up catching that trap if they happen to reverse the market. So want to wish you all a fantastic day. Thanks so much for listening and being here today. I truly, truly appreciate it. Thank you once again for all the kind support to the channel. You guys are awesome. And I'll see you right back here bright and early Thursday morning. Have a great day.